Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar remains negative for the third consecutive day after slipping back below 69 cents and returning to levels last seen in early April, despite the RBA's hawkish June meeting minutes. Despite the RBA's hawkish tone, markets remain skeptical of an August rate cut. Also, attention turns to a busy week for the US, led by the June non-farm payrolls report on Thursday, ahead of the Independence Day holiday. For the forecast, expects 110,000 jobs added and down from the previous in May of 172,000 jobs added, with the employment forecast to remain at 4.3%. Investors will also monitor the JOLTS, the ADP employment, jobless claims, and the FOMC minutes on the 8th of July next week, with markets continuing to price at least one Fed rate hike this year under Chair Kevin Walsh's data-dependent approach. The technical remains fragile. As we can see here, we are oversold. The MACD is negative and the ADX is broken above 50, and it's still remaining somewhat strong to a bearish trend. Key level, of course, is back here in March, April, when the market challenged 68.35.45. I do anticipate a bounce from there, and if so, a correction back to the 69 to 70 cent area. The euro, well, is finding a bit of weakness after the previous day's whipsaw price action, but still hovers around the 114 handle as markets brace for a pivotal week. Attention centres on Wednesday's preliminary Eurozone CPI and ECB President Christine Lagarde's remarks at the Sinatra Forum. Headline inflation is expected to ease to 3% from 3.2%, while the core CPI in Europe is forecasted to edge higher to 2.6% from 2.5%. A stronger inflation reading could revive expectations of another ECB rate hike and support the euro, while a softer result, helped by lower oil prices, would reinforce a more dovish outlook and favour the US dollar, where it currently holds around 101.30.35. So turning to the technicals, we can see the market is a little bit mixed here. MACD is still negative, but the RSI is hovering around the midway point. As I mentioned before, the support area is a key level at 113.40.15. Let's see if we get a bounce there and look back towards the 114.5 to 115. Looking at dollar yen, well, the market is testing above the 162 key area, while the US dollar holds steady at 101.35. Despite overbought momentum, and this RSI is really pressing high here, I do feel that the BOJ is keeping a very close watch on the market, and we could see one of these candles come in. So it's a little bit mixed in terms of why we're pushing this high, in terms of the fact is that the risk scenario is back to 159.5 to 158 and completely wiping out these candles like it did previously. Let's keep an eye on that. Turning to sterling, well, the market was a little bit stronger overnight as Labour front runner Andy Burnham, widely expected to become the UK's next Prime Minister by 20 July, pledged to maintain the government's fiscal rules, easing investors' concerns over a shift in economic policy. Combined with that, with a slightly softer US dollar, the comments could find the market holding still above 132. Besides the US data, eyes will be on the UK Q1 GDP for fresh direction. Wrapping up with commodities, well, this right shoulder appears to be fizzling out as weaker play comes into the gold. And now looking back towards 3,975, even though we did briefly test down to 3,940. Very whipsawed. And again, I'm still a little bit hesitant in coming out with any calls, other than the fact I did like this inverse head and shoulders, but it doesn't seem to be eventuating. But we are negative with the RSI, so we could see a little bit more to the downside. And oil still holding above that key area, which is around $67 a barrel. Let's see if the market finds demand there and corrects back towards possibly $80 a barrel. Well, that's a wrap. Thank you for joining me. And as always, look out the news report, and I hope you enjoy the great start to the day.